Hi, Kerry here. You might have noticed if you're subscribed to my retirement channel, Best of Us in Retirement, haven't been making many videos of late, and it's because I've been working on another project, and that project is all about building a real estate empire, a rental real estate empire. I use as models of retirement those people that I understood and lived with. That was my parents and my in-laws. My father was a little more aggressive. He got into rental real estate. He was a salesman, so he always had something going. My in-laws, on the other hand, retired and basically were not investors. They basically put most of their money into CDs, and that worked okay back in the 80s and 90s. Got a little rougher in the 2000s, but they never really got involved in investing in the stock market, so they lived within their means. I've recognized that if you were in the CD market, if you were like them today, you're out of luck. They aren't paying anything on CDs. So I got to thinking that I need to introduce to my retirement channel the art of building a real estate empire. How I've approached it that I think is different than most people is it is purely an income source. I farm out all other activities. There's basically four pillars in building a real estate community or empire, if you will. And that is, number one, an investor. That's me. Number two is a friendly investor real estate agent. That's an individual that I basically hire to help me go find the homes that are rent worthy and that will appreciate in value and that will attract the kind of client that I want, that isn't going to tear my property up, and that I can basically sit back and collect the rent. The third element to that is a good banker. And I don't mean a banker. You will not find the loan originator that you need for your real estate empire in a bank. You'll find them as a loan originator, an independent contractor in many cases that can help you secure a loan as you want it and at the terms that can help you make a profit. And then the fourth, and the one that is most often overlooked or skipped or just not done well, is a property manager. And when I say a property manager is when I buy a piece of property, I want to buy it, I want to close on it, and then all I want to do with it from that point on is to collect a monthly check from my property manager. He is responsible for gathering the money, taking care of any repairs. If someone moves out, cleaning it up and getting it rented again, and making sure that any repairs that need to be done get done. And I don't want my phone ringing at 3 o'clock in the morning and saying a toilet is clogged. That's not what I want. I'm the investor. So I am building a course to explain how that works. The key element in that course is a spreadsheet that I've created. It's an Excel spreadsheet that is a breathing instrument, and such that I can plug numbers in and it can give me the numbers back that tell me, is this a good investment or is it not? Now, in the course, I'll even show you how you identify the neighborhoods you want to be in and the neighborhoods you don't want to be in. There are neighborhoods that are too expensive that you can't afford, and then there are neighborhoods that are too cheap that you can't afford. You don't want any part of them. It's that sweet spot you've got to find, and there are tricks that I have learned over the years as to how you find them. And if you have a intelligent and a friendly real estate agent, they can use the MLS to tell you beyond a doubt, is this a moneymaker or is this one you just run away from as fast as you can? So what I want to do, though, first is show you that spreadsheet I've created so I can entice you to say, Martha, maybe this is something we should consider. Maybe we should look further into it. So let's go to the computer and look at the spreadsheet. I wanted to make available or educate retirees on how you can actually get involved in real estate, rental real estate, and not be taking on a job, not be in a position that you have to go in and fix the place up and unclog the toilet and take on some of the responsibilities of keeping the property up in order to make a profit. And so with my background in real estate and my background in investing, I'm creating this course. And I just wanted to share the spreadsheet that I've been working on. And that's one of the reasons I haven't made many videos for the retirement channel in the last couple of weeks. So what I'm doing here is this is what I'm going to make available. And I want you to get a copy of it because you're my retired people. What I've looked at is I found a house in Irondale, which is in a regentrification mode. So the prices will go up. It's a 4-bedroom, 2-bath, 1,520 square feet for $199,000. And so I just plugged in the numbers, and this spreadsheet does that. It's the 4-bedroom one built in 1987, 1,500 square feet, $199. And I hypothetically went in and said, I'll give them $180,000 for it. After I did some research on MLS, which I'll explain in the course, I figured that a going rate, a quick rent rate, is about $1,750. I said I would put 20% down, or $20,000. I had originating fees of $1,280. And closing cost of $1,200. So my total out of pocket under this scenario is $22,480. Now what I did is I then used all those numbers, put in the property tax, put in the insurance, put in the maintenance fees and our management fees, and then maintenance, and then came out with my projections. Is this, and these are terminology that and basic information that is used within the industry. And then so I can look at that column and say, this is or isn't a good investment. So then I wanted to break it down and make it even more understandable. So I said, okay, let's say this was Virgil and Pauline, and they just dropped the 180,000 in and paid the closing cost, and then turned it into an income producer with the management company doing all the debt collection or rental collection and maintenance and everything done, and all they would do would collect a check. Based on that, I came up with annual rents of $19,950, costs of $5,000, operating expenses of $5,552, which would give them a gross profit on their $182,400 of $14,397, or 7.89%. That's a good return in today's market. Certainly a lot better than that of CDs or even dividend stocks. So then I said, okay, let's finance the purchase and at its maximum amount, and what do we come up with? And again, we put our $20,000 down. That means we financed $160,000, and I go through the numbers again, and what I come up with is that I'm not only getting a positive cash flow of $6,106 a year, but I'm also taking advantage of the depreciation and the appreciation. Depreciation is I get to depreciate it off my income taxes. I take the $180,000, I divide it by 27.5, that's the depreciation. I get to write that much off of my income tax each year. I also get to write off the interest that I'm paying on my loan. And so I create although a positive cash flow, a negative income tax position, which reduces my overall taxes. So if I come down to it and say my gross equity increase plus tax savings on this $22,000 invested gives me a gross equity increase in tax savings of $29,373. And when I put that up against my cash out of pocket of $22,480, I've got an overall return of 131% on the home. So I want to make this something you're aware of. I want you to know that I'm working on a course that if this is something you want to understand better and create how you get a team of people. In essence, you go into business, you have a real estate agent, you have a banker. I'll tell you how to line up that banker. You have a property manager, and all you do is put the money up and collect the rent. And then if you're single and you're building wealth, you actually increase your net worth on an annual basis, such as in this property, you're getting appreciation of $16,200 a year. You just can't beat it. So I want you to be aware of it as a retiree. If you have children or younger, I wanted to give you a heads up on this. So let's talk a little bit more about it, but that's why I haven't had some videos in front of you in the last couple of days or weeks as far as that goes. Okay, I am not saying drop what you're doing and start becoming a real estate investor baron. What I am saying is, as a service to you, as someone who has, I think, mastered retirement, I want to share this with you. And this will be your first look at it. You're going to find a link to that spreadsheet in the description. You'll go and it'll say link to rental real estate spreadsheet, and you'll get it and you'll work with it. Now it won't be breathing, in other words, that you can change the numbers. That takes a different kind of download, which I'll do through the course. But I wanted you to see this so that you and Martha can talk about it and say, is this something we should give some more thought to? My objective in this channel is not to throw data at you and say this is what the average individual makes on Social Security, and this is what the government will do or for you for Medicare. No, what I want to do is give you an advantage, and that is to share my knowledge with you as to how you can make your life better. So go to the down and below and click that link and get your copy, and then I'll have your address. And as this course gets up and going, I'll let you know about it. So let's live this retirement and make it the best half of our lives.